Ladies and gentlemen, good day and welcome to the CE Info Systems MapMyIndia Q3 FY24 earnings call hosted by Anand Rathi Share and Stock Brokers. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shobhit Singhal from Anand Rathi Share and Stock Brokers. Thank you, and over to you, sir.
Good evening, everyone. On behalf of Anand Rathi Institutional Equity, we welcome you all to Q3 FY24 conference call of CE Info System MapMyIndia. We have with us today Mr. Rakesh Verma, co-founder and chairman of the company, Mr. Rohan Verma, CEO and executive director of the company, Mr. Anuj Jain, CFO, and Saurabh Somani, company secretary. I will now hand over the call to Mr. Rakesh Verma for his opening remarks. Post that, we will open the floor for Q&A session. Thank you, and over to you, sir.
Thank you, Shobhit, and welcome to all the participants in today's earnings call for Q3 24 for MapMyIndia. We are happy that MapMyIndia crossed for the first time a milestone of rupees 100 crore plus quarterly total income, and again achieved an all-time high in revenue in Q3 FY24, growing 36% year-on-year to 92 crores, while year-to-date revenue has touched rupees 272.5 crore. EBITDA in Q3 FY24 grew 38% to 38.6 crore, and year-to-date grew 32% to rupees 116.6 crore, with overall EBITDA, year-to-date EBITDA margin at 43%. Year-to-date MAP-led EBITDA margin remains strong at 55.1%. IoT-led EBITDA margin has expanded to 10% in Q3 FY24 versus 8.2% in Q2 FY24 and 6.3% in Q1 FY24, and in year-to-date stands at 8.2%, expanding 730 BPS year-on-year. Year-to-date PAT is robust at 96.2 crore, growing 21% year-on-year, with PAT margin at 32%. Q4 FY24 will be also very exciting as we foresee the future. Not just we are happy with the growth of our core B2B and B2B2C business, we are also pleased to see our consumer business take shape with increased brand awareness and product uptake. A little more depth into what I said just now. Revenue for the 9-month year-to-date FY24 was at rupees 272.5 crores with a healthy growth of 30% year-on-year. Q3 FY24 revenue hit all-time high of rupees 92 crore, driven by growth in higher growth in C&E market. EBITDA margins expanded by 50 BPS to 43% in 9 months FY24 versus 9 months of FY23. EBITDA and PAT grew by 32% to rupees 116.6 crore and 21% to rupees 96.2 crore respectively for the year-to-date 9 months FY24 year-on-year. Cash and cash equivalents at 516.1 crore at the end of the quarter despite dividend payout. I would just like to help all the participants of clarification in the sense that the information that we have submitted on the stock exchange and the investor presentation, we stick to our 43% EBITDA for this quarter, although some of the 42%, not 43, while some of the calculations in the absence of not having the full information is being calculated, may be calculated at 39% for Q3. The reason is we had taken a provision for approximately 2.5 crores in the previous period, and we have been able to sell those inventories into the market, resulting in removal of that provision from the from our P&L. We booked that in the other income category rather than reducing the expenses. So what you see, other income of 822 crores in the previous quarter, it shows as 1154 million, 11 crores 54 lakhs in the Q3 of FY24. What one has to do is subtract that 2.5 from that 11 crore in order to arrive at the correct EBITDA. I just thought it will help you understand why the EBITDA is 42%. As regards IoT business, as I said before, we are seeing a continuous improvement in the EBITDA of IoT business from 6.3% in Q1 to 8.2% in Q2 to 10% in Q3. Now, one side, the revenue growth is happening in IoT. The other side, the EBITDA margin is improving. So so all this is telling us that our strategy of the IoT business along with map-led business is giving us good dividends. I think with this, I will close my opening remarks and let Rohan talk further more in detail about the business.
Thank you, Mr. Verma. Good evening, everybody. This is Rohan here. Like he said, we're excited about Q4 FY24. We've got a strong order book build-up based on very large new wins, and we look forward to sharing those developments with you soon. Year-to-date revenue growth was broad-based. A&M was up 19.5%, and C&E is up 43.1% on the market side. And on map and data was up 37.6%, and platform and IoT was up 26.5% on the product side. We've had multiple wins and go-lives in Q3 across our Auto OE NK suite, covering maps and IoT. And as I said, there's an exciting funnel ahead for that. Also, on the consumer tech, enterprises and government side, we've had multiple wins and go-lives covering both map-led and IoT-led digital transformation. As regards the brand and B2C, we started a strong 360-degree marketing push for our consumer business. This has been highly effective as well as cost-efficient in increasing the Mappls MapMyIndia brand awareness and product traction, as I hope all of you as consumers and interested citizens may have noticed. We're happy to see the start of ad revenue monetization of our app as well as sales growth of our gadgets. So let me take you through A&M in a little bit more detail. On a quarter-to-quarter basis, it grew 12.5%. This is ahead of industry volume growth. And just to share, our Auto OE licenses in 9 months FY24 have crossed the previous full year FY23 already. We've had multiple wins and go-lives. For example, a large Indian four-wheeler OEM, existing customer of ours for more than a decade, signed up for even more multiple new vehicle models across IC and EV, and their new EV four-wheeler has also gone live. So that's an exciting, continuity and expansion for us. A European two-wheeler OEM signed up for navigation with us, and there have been multiple go-lives for multiple EV two-wheeler OEMs. And then on video telematics for employee transport safety, as well as tracking of employee transport vehicles from large manufacturing companies, we've been doing in the mobility area, and also revenue from OEMs for our Mappls Kogo travel assistant and commerce solution has started. And of course, there'll be this large win in auto OE space that we'll share with you soon. On the CNE side, it's actually seen a sharp growth of 70.9% in this quarter, and this is based on nature of certain contracts. And hence, between A&M and CNE, we always see this kind of balance, overall leading to a strong revenue growth. And it doesn't bother us too much when one or the other has a slight dip or a slight increase. Overall is what we look for. And growth in CNE remains strong at 43.1% on year-to-date, year-on-year basis. Multiple wins across industries, as I said, including for defense and drones. A large e-commerce and D2C sector companies have signed up for our map APIs to cover better address capture, location-based personalization, and map-driven user experience improvement. We've seen drone 3D mapping and risk monitoring for large logistics company, warehouse, as well as payment and fintech industry for location data-based risk scoring. A win for IoT-led logistics monitoring, including control tower solutions across cement, sugar, and steel industries, and also for the PMGSY road construction and food civil supplies distribution monitoring. Also, the government's Viksit Bharat campaign, where they're promoting all the schemes and campaigns pan-India. This is using our map-led and IoT-led solutions, showing how we are an integral part of the governance digital transformation. And also for UP State, tourism and Ayodhya metaverse, we've had business wins and delivered that. So we're happy to be generating revenue from that area as well. Map and data and platform and IoT have been seeing steady growth as well on the product side, and our investments in both these categories, of course, continues full hog. On the B2C side, we saw brand and app see traction in Q3, a strong ATL and BTL marketing push. As you can see, we did ads in mainstream cricket, in TV news, and otherwise. We've done BTL at point of sale through on-ground events and outreach, as well as you must be seeing us on social media, as well as moment marketing, like during the cricket World Cup, we were there with the metaverse, etc. Our Mapples app, which is India's own maps app, seeing strong fit and traction with users through our own India-specific road safety features, and we're doing multiple MOUs with traffic police. And finally, as I said, our in-app advertising revenue was kickstarted. We did a great campaign along with Cadbury's, where they were promoting local businesses, homepreneurs on the map, on Mapples. It was only done on Mapples, not on any other map or map app. And this is a win-win-win for consumers, for the client brand, as well as Mapples. So with that, I'll turn it back to the moderator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shobit Singhal from Anand Rathi Share and Stock Brokers. Please go ahead.
Yeah, thank you. So I have two questions from my side. So in Q2 earnings call, so we have given a revenue growth guidance of around 40% for FY24. Right now, if I see 9 months, we have done around 31% kind of year-on-year growth. So are we still maintaining this revenue growth guidance?
The first and foremost thing that we shared in June 23 was our overall visibility of and plan and goal to cross 1,000 crores in the next 4 to 5 years, FY27, FY28. And that, if you see, comes out to be a 35 to 40% CAGR.
No, depending on 4 years, 5 years.
Yeah, depending on 4 years or 5 years. So that extrapolated down to every year is the number that can come out. We are still gunning for our targets. There's nothing that has changed. We're quite excited for Q4. But I mean, holding us to a specific number when we've given an overall guidance, I think is is going to be difficult or challenging. But yeah, we are still gunning for it. We think that Q4 will be exciting. But also our aim is first and foremost to be in well positioned for the next 4 to 5 years.
Okay. And also you have spoken about the consumer app advertisement income. So how do you see the revenue contribution from it going forward? Though right now it's on an initial stage.
It's on initial stage, but it's quite promising, and this is why we are keen to further invest in our consumer business. It has multiple benefits for the company. It's standalone, it's an interesting business, but also the synergy with our B2B, with more people using our products, the data that we generate, and the benefit it has to our B2B business. So we do see that going hand in hand as the consumer business and consumer awareness, consumer usage increases. There is built-in monetization through ads, through gadget subscriptions, gadget sales, and other commerce activities that we'll be able to, leverage.
Okay. Thank you, sir. So that's all from my side.
Thank you. The next question is from the line of Vimal Jamnadas Gohil from Alchemy Capital Management Private Limited. Please go ahead.
Yeah, thank you for the opportunity. So my first question is on your marketing and business promotion expenses. We've typically done about 20 to 25 crores every quarter since we've started reporting numbers. This quarter it was about 50 crores. So just wanted to get a sense on what should be the outlook there. Given that you are going aggressive for advertising Mappls. The second question is you spoke about monetization of the same. So if you could is there a possibility that you could quantify what was the sales of gadgets? Revenues from sales of gadgets and ad sales from Mappls because of Mappls during maybe for 9 months or quarter, whatever data you would like to share on that front. Thank you so much.
Yeah, Vimal, I'll clarify. Our marketing and business promotion expense for Q3 was 5.3 crores, not 50.
Yeah, I'm sorry. Yeah, it's 5.3 crores. My bad. Yeah.
5.3 crores. And if you look at standalone, you'll get a better sense. It's 4 crores, which was I told you all about the ATL and BTL activity we are doing. So I think for the amount of the value that we've gotten, it's quite cost effective. I don't know how many companies are able to be creative with their ATL, BTL, social, online, offline, cricket, TV news, which are mainstream, yet spend such less but get large bang on the buck. So that's on marketing, and we continue to be efficient, creative, etc., to try to drive a lot more awareness in a controlled cost manner. And so the number is quite small, as you can see, compared to the overall numbers of revenue, etc. And as per the monetization value of the ad sales, it's right now small, so we're not. But it's not a trivial number, but it's also not a number yet that that is worth talking about from a materiality point of view.
So just a clarification, or rather a follow-up over there, Rohan. When you say it's been very cost effective, what are the benchmarks that we're using when you say cost effective? Is it the revenue that you are getting, or what exactly are we looking for?
Now the focus is brand awareness and consumer reach or consumer downloads. So we look at what is the reach, what is the awareness of the number of people who now know Mappls, MapMyIndia versus what they knew a quarter or 6 or 2 quarters ago. That has significantly expanded. If you ask in your circles or you do these dipsticks, there'll be a marked difference in the awareness now versus earlier. Of course, we had announced kind of in the previous quarter the milestone we crossed when it comes to the Mappls app downloads. I think we had announced last quarter that we had crossed 10 on Android and 1 on iOS, so 11 in total. We're not announcing the numbers for this quarter, but we are quite happy with it. And so on all those metrics, of brand awareness and product traction, the app traction, is how we look at cost effectiveness versus the amount we are spending.
Right. All right. Thank you so much. I'll join back in the queue.
Thank you. We have the next question from the line of Anmol Garg from DAM Capital Advisors. Please go ahead.
Yeah, hi. Thanks for the opportunity. So I had a few questions. Firstly, if you can highlight the reason for increase in the cloud hosting charges. So now the run rate has come to 4 odd crores, and how should we look at it going forward?
You mean the communication including cloud hosting expenses, right?
Yeah, that's right. Yeah.
3.94 crores. Yeah, see, over time it will increase. I mean, I would not say it will increase in line with revenue or any such thing. There's a lot of optimization that we continuously do, and it's a mix of public cloud and private data centers, hybrid cloud. So there's a lot of optimization at the engineering side that we have that we can do. So we don't see this as being I mean, it will increase, obviously, as the size and scope of our business and of our technology deployment, whether on B2B or B2C increases, whether API calls or NCase calls or digital transformation calls or app calls, it will increase, but there's enough engineering leverage that we have to control this, because public cloud is not the only way to go. I think we have enough expertise on private kind of deployments, etc.
Sure. Also, Rohan, if you can indicate how much of our auto revenue is coming now from the EV segment, because you talked about a couple of wins in this quarter and last quarter as well. And if you can also highlight if there is any price difference between EVs and passenger vehicles for our maps.
Yeah, EVs have require more services from us, more features. So the realization can be higher in EVs versus IC vehicles. EVs, across four-wheeler and two-wheeler, if you look at the overall portfolio, I would not say that it's still, even if you look at the industry, forget about us, I don't know what the total base, how much percentage it is. It's in the single digits if you look at the industry. So for us, I mean, our attach rates in EVs let's say that it's in a similar proportion, but I wouldn't know, and I don't want to give, but also I don't specifically know right now what is the exact share in our business of EV and non-EV. It's just that almost every EV that is getting launched or is planned to be launched now in the industry is going with our solution.
Sure. And also, previously you have highlighted some parts on the international expansion. So are we planning to build more comprehensive maps for our neighboring countries, which might require more on-ground people to collect addresses data, or are we planning to take our solutions based on the current maps that we already have? So just wanted to get a view on how we are trying to expand internationally.
See, on international, we have couple of legs. Our software stack itself is quite powerful, right? I mean, in India, we are doing map, we are doing software, we are doing IoT, and then we'll do drones. So there's like 4 legs to our business if you look at it from a map data, then software, then IoT hardware, and then drone-based solution. In international, we have the option to go with customers in different geographies with any or multiple parts of our offering. So software doesn't, so each of these have different levels of either investment required as well as return. And the general approach that we've taken is, we are product first, but we are also customer led. So we are working with our customers who want to work with us internationally based on what solutions they need. And when we have these customers, it gives us a reason to build out the solution that they need from us. it is not necessarily that they want a map from us. It is in many cases now internationally they are choosing to work with us because our software is world class. And as part of our software solution, if we also have to enhance the global map that we already have, and you know that we have anyways created maps for 8, 10, 12 other countries outside of India in the last multiple years. And for rest of 180, 90, 200 other countries and territories, we have compiled or integrated the map into our solution to make it global. So if they require us to enhance that, we will do that. But software itself is something that customers are already asking for. And where they will ask for map, we will do that as well.
Sure, Ron. And lastly, if you can indicate that should we assume that advertisement cost would be in the 5 crore sort of quarterly range, or I think that it can again come down in the next few quarters?
It's calibrated every quarter. I'm not going to give you a specific number. We really look at that quarter, what our objectives are, what is the marketing mix or spend mix, I would say, and will it help us achieve our objectives? And so it's not that we pre-decide that we will spend this much money. Every quarter we are looking at, besides overall macro financials for the company, but also we're looking at what is the objective for that quarter and what do we need to achieve that. So it's a bit calibrated quarter by quarter.
Sure. Thanks, Rohan. I'll join back in the queue.
Thank you. Ladies and gentlemen, we request you to please restrict your questions to 2 questions per participant. The next question is from the line of Nitin Sharma from MC Pro Research. Please go ahead.
Yeah, hi. Congrats on good set of numbers. 2 questions. First of all, would want to understand with the increase in the engagement with the government, how should we see the revenue contribution from the government to the overall top line for, say, next 1 to 2 years?
Yeah, I mean, it's really good that the government is having a digital transformation agenda. So that way, our maps and technologies are increasingly relevant in the government space. But we've told you some principles that we follow beforehand when we look at government business. We go in as a OEM, a product and platform company. Second is we focus on, the quality of government business that we want to pick up. Because we know through, not just in our industry also, or at least on the services side, I mean, there's not many product platform companies, but you have seen how people, when they don't look at the quality of business, what happens to their financials. So we are careful on what quality of business we are picking up. In many cases, we work with systems integrators, so we are kind of de-risked a little bit. And also it's not going to be a large proportion of our overall business. I mean, that kind of portfolio between automotive, corporate, government, retail, is something that we keep in mind. So we pick as much business, and there is more business to be had, but we are able to pick and choose and compete where we want to compete.
So is it fair to assume that you will continue to remain 5 to 10% kind of range, or it has increased since then?
No. Well, let me add a little flavor to this. This 5, 6 was something historical. Now, if you're asking me how much it can go up, it depends on the kind of business we pick up from the government. As Rohan said very clearly, is the product mix, is the quality of that particular opportunity. We are very selective in picking up the businesses. We just don't do any freebies, 1. Second, we always do things based on revenue-based projects or work in the government. So that's why you may not be noticing us in some of the areas which probably do not excite us. It's not a question whether we have the technology or not. We do have, but we don't try to get into those and waste our time.
Understood. Secondly, the drone 3D mapping and risk monitoring business that you won with the large logistics company. Can you please help us understand how is it? Is it a one-time business or is it annuity based? Some color on that would be helpful.
I mean, see, once somebody starts wanting to do these continuous inspections and monitoring, then it starts becoming a recurring business. But it obviously this drone business starts off with first time. And then as it becomes part of their SOPs to do the risk assessment can't be a one-time activity. It has to continuously happen. So at this stage, it's early stage with that customer. It's also not fully deployed across. There are n number of upsells there in terms of multiple warehouses, multiple yards, and then multiple times. And then there's additional upsells of the software stack with that for analytics and other things which are non-drone based. So it's good that we are having these multiple entry points or multiple use cases across different products for same customers or different customers. That's what's exciting to us about our business, that using this we got into this customer who was not a customer before, but we know there are n number of more things to upsell, and even within the drone there's a recurring business that can happen.
Understood. Thank you.
Thank you. The next question is from the line of Moez Chandani from Ambit. Please go ahead.
Hello.
You are audible, sir. Please go ahead.
Yeah, sure. Good evening, and thank you for taking my question. So my first question was on Kogo and in-drones. So can you just give a sense of how you're looking to monetize these products, and also what profitability would be, or how soon you expect them to become profitable?
Well, you asked about Kogo and in-drones. Kogo is in one kind of a business. In-drones is in another kind of business. Now, we invested there with the clear objective that it will help us in our ecosystem, the businesses to grow in their respective areas. To be specific, in case both of them, the Kogo has to do with Mappls app on one side. In-drones has to do with our drone business, kind of, if they can become a pillar to our drone business. So, both of them are startups. They will take some time to grow their business, and with time we should be able to leverage them.
Yeah, I'll say it in my way or different way. See, drone is an important pillar for us as a company. Mr. Verma's talked about it multiple times. Maps, IoT, and the third pillar, drones. Even 4-5 years ago, we had an investment in a drone company, and even now we have this investment in drones. Our objective as MapMyIndia is to become a serious, significant leader in the drone area. That's a combination of organic and inorganic. Investments in companies are just one way to learn. That's not the only play that we have in drone business. And we are seeing MapMyIndia's own ability to generate business through drones in the last 1.5 years. Standalone supplying drones to the client, doing drone as a service solutions, or incorporating drone into an overall smart city GIS or 3D digital twin solution, which is paid, we are earning money from. All of that is happening. So doing an inorganic investment has multiple reasons. One is it could be looked at from a financial point of view. It could be looked at from a capability point of view, or even a learning point of view. So overall, if our drone business is growing, we are happy about that. And as for the Kogo part goes, as Mr. Verma said, one aspect is it's an AI-powered travel assistant and commerce solution, allowing people a new way to travel, a new way to book, discover, plan, and book travel. This will be a great kind of add-on to Mappls app, a capability that isn't there in our competitors. You can think of it like a chat GPT for travel with commerce, bookings, etc. And it's also a great add-on to our automotive NK solutions, which we are able to give to OEMs. So overall, if it is satisfying that requirement, that itself is good to us, good for us, because Mappls app, our consumer business will grow and our automotive business will grow. Then beyond that, how the financial investment pans out, how their standalone business pans out, those are add-ons that we look at.
Sure. Okay. Thank you for that. Also on your consumer mapping business, so you mentioned that downloads have been particularly strong, but is there any data point in terms of MAUs or DAUs that you can share with us for the Mappls app?
Fairly engaged audience. It's you can imagine navigation is quite a frequent use case. It's not just a download and not do anything use case. And even for gadgets, if you've bought and invested in a gadget who you want to use to monitor your vehicle, you can imagine it's a highly engaged audience. So we are tracking those at the appropriate time. We will start sharing those on a more frequent basis. We wanted to give a sense last quarter that we have reached a certain size and scale, and we've only been growing since then on all metrics when it comes to downloads and usage or engagement. And as we kind of put, fructify or strengthen the focus on consumer business, then those things also will start tracking and reporting.
All right, great. Thank you. Thank you for that.
Thank you. The next question is from the line of Majid Ahmed from Smart Sync Investment Advisory Services. Please go ahead.
Am I audible?
Yeah. So you're not very clear, sir.
Am I audible now?
This is a little better. So please go ahead.
Yeah. Thanks for the opportunity. Very good numbers. So my first question is, how far is the client retention in their automotive business? And I want to need a breakup of client retention as well as new customers or new clientele that's coming to automotive business. And that's the first question.
I think all the OEMs that we are working with.
Talking about retention, to look at just the last 2-3 years, I would say it's 100%.
Okay, that's great. And secondly, the question that I have is, as far as the UI experience, the Mappl software that you have, I think going forward, when I saw some of your reviews, some of the locations and everything that sort, I think how far are you going to improve the experience? When I saw many of the locations, primary location, there's no any review, there's no any feedback. How far are you going to improve the tech platform going forward so that it becomes more robust and it increases network effects for the customers? Yeah.
I mean, I think if you look at kind of the qualitative and quantitative reviews on social media or App Store, Play Store for Mappls app, you'll be fairly happy as a whole. People are really loving it. But, if to answer your question, is the map ever perfect? Answer is no. That is our continuous endeavor to keep updating and enhancing and improving the map. And also on the same time, is the software ever perfect? Answer is again, no. We can keep improving our UI, our UX, our features, our bugs, and this is a continuous engineering effort to build new things, but also to keep the existing things improving. So there's a long roadmap that we have that we want to achieve, and hence you are seeing every few weeks new updates going out on Play Store and App Store. And also on the map, of course, we have this monthly release cycle as well as real-time rich release cycle, where, when, like for example, when this Mumbai bridge opened, the MTHL, the Atal Setu, the moment it was inaugurated by the PM, it was there on our map available for people to navigate, whereas in others you wouldn't have seen that. And the other thing is we also updated the toll information so that when people were kind of doing that time and toll fee cost benefit analysis, they could see that on Mappls, which they couldn't see on others. So I mean, it's a continuous effort, and we have to keep working on it. Any feedback to us via social media or otherwise, we love getting it, and teams get onto it immediately on map or software.
That's great. Last and final question. I just wanted to get more information about the use cases on the NBFCs and the food delivery business. How far are you going to, I just want even more detail on it.
We talked about a lot of use cases covering this e-commerce, covering BFSI sector. I think you can refer to that. But.
Okay. Thank you. Thanks a lot. All the very best.
Thank you. We have the next question from the line of Ridhima Goyal from Acquaint B Ventures. Please go ahead.
Hi, thank you so much for giving me the opportunity. I have two questions. One is I just wanted to know what is our repeat business from the automotive and mobility segment customers? Like, for example, if Mahindra and Mahindra has your map services, then how frequent they come with you and get the map on their vehicles?
I think for every vehicle that they produce from the factory for that model goes built in. Not naming any specific OEM, goes built in with our solution. And then the updates happen through the software, through the cloud. Mostly nowadays it's connected vehicles. So nowadays the updates are for new vehicles that are rolling out. Updates are happening from the cloud, but still there's a large legacy of vehicles where the updates have to happen through the service center, etc. Where people have to go in and they'll flash the new update. But more and more you'll see over the next 1, 2, 3 years, all of this happen real time, just like it happens on our app.
So we do contract with them for particular model, and for every new model we have to do a new contract. Is it right?
There are platforms which have multiple models, and so it's not specifically sometimes every model. It's a platform could cover multiple models.
Understood. And just wanted to know, what is our mix between fixed and variable income in terms of both these segments, automotive and this CNE part? Like, how much is coming from the fixed part of revenue and how much is coming from the variable? Like per vehicle or per app or per delivery kind of thing?
I think if you look at the A&M, mostly it will be, large amount will be volume based. And if you look at CNE, it's a mix. Specific numbers anyways, I think we share yearly, annually, with the order book, etc. But just to give you some flavor on it.
See, overall, if you think of MapMyIndia, I'm talking about overall, there might be exceptions, that it is always an annuity SaaS kind of a business where every even if it's automotive, the vehicle that comes out, if I signed up a 5-year contract and for every vehicle that leaves the factory, I'm getting X rupees. It's kind of annuity from a conceptual perspective. So that's how that's how MapMyIndia's future business is pretty much predictable. Till the time something new happens, then that adds more to the flavor.
Okay, so is it like we enter for a 5-year period and the customer will give annuity every year for one particular vehicle only?
No. Take it that if a automotive OEM is going to sell 100,000 vehicles over 5 years, and every year if they're selling 20,000 vehicles, then every year on a monthly basis, they will give us X amount of money for those 20,000 vehicles. I just told you that on a conceptual basis, you think of annuity or you think of in terms of volume. It's a volume-based contract.
But there are per vehicle per month or per vehicle per year fees also. So, it's not as straightforward.
I think generally you take it like that at this point of time. In future, you'll be hearing also that add-on thing where there might be additional revenue coming from certain services that's being rendered on top of this. But at this point of time, that's what you can consider.
Okay, understood. And my second question is related to your drone business. I'm not getting it. Like, how are we monetizing our drone business revenue? Is it like we are selling drones to the customer, or we have our own drones and we are just doing the maybe any kind of analytics that we are selling? How is it working?
It's a mix of 3 ways. Yeah, we are selling drones to customers who want the drone. The second is we are providing drone-based services or drone-based analytics, as you put it, where customers, for example, they don't want to buy the drone, they want the output based on the drone data collected. And the third is drones. We monetize as part of an overall solution that we have to give to the customer, where drone is one way of data collection, let's put it like that. So all three ways we are able to. So we have our own drones, we sell clients, and we provide solutions based on drones.
And how much is the drone
Sorry
revenue?
to interrupt, ma'am. We request you to please rejoin the queue for follow-up questions. The next question is from the line of Sanjaya Satpathy from Ampersand. Please go ahead.
Yeah. Hi, sir. Thanks a lot for the opportunity. Can you hear me?
Yeah.
Yeah. So my question is that the company balance sheet has, there's so much cash, and still the company is looking at almost 500 crore of equity capital fundraising. Can I just hear your thoughts on that in terms of what are the kind of deployment that you are looking at in terms of capex or anything else?
Well, yeah, the company has 500 crores. It has generated over the last X number of years from its own internal accrual. Now, and for that, the company gave a nice plan, a roadmap saying that we want to achieve 1,000 crore revenue over the next 4 or 5 years. So this is one part. The company historically has always worked on the next 5-10 years kind of a, that's the kind of a thinking company has always. So in the current context, we came up with this whole thinking that if we want to grow in the international market, if we want to really accelerate the drone business, if we want to get active into the consumer business, then there would be money required for these businesses, which will help us for the not just the next 5 years, but beyond 5 years. So what we might end up after raising this fund is over the next 2-3 years, we will invest this amount organically or inorganically so that our business gets built for the subsequent 5-10 years again. So that's the reason we are doing it.
Understood. And so my second question is that in your opening remarks as well as press release, you have mentioned that you are very excited about Q4. And in fact, you had mentioned that at the end of previous quarter as well. Is there anything more to it in terms of specifics that you can share with us, or it is just that it is just a subjective thing you have mentioned?
No, when we say we are excited or we are happy about what's going to happen in Q4, we had mentioned it in the last earnings call also that H2 is always better than H1. And also we had mentioned that Q4 is always better than Q3. These are some of the statements we had made last time also. Obviously, certain things happen in Q4, and that's all we mentioned that we are excited about Q4 also.
So nothing extraordinary or different from the historical trends?
No, not historical. Otherwise also we say that Q4 is always better.
Understood. Thanks a lot, sir.
Thank you. The next question is from the line of Amit Thawani from Clear Blue Capital. Please go ahead.
Hi, thank you for taking my question. I was just reading the roadmap to 1,000 crores, and I was looking at the biggest contributor, I believe, is the mobility segment. Can you just you quantified the opportunity at 6,000 crores. So, and you also quantified the addressable market at 34 crore devices with the industry adoption of 3 crore devices. Can you tell me what kind of devices are we talking about out here?
Okay, first let me help you understand. When we said what you look at the mobility part of it, that we talked about that there is a 9,000 crore addressable market. You can explain. No problem.
You're talking about the mobility market. I mean, we talked about multiple markets: automotive, corporate, government, and mobility, or mobility/IoT. You can think of it like that. And we talked about overall addressable market for us, which we are focused on, is 8,700 crores, out of which we want to get 1,000 crores plus.
Yeah.
In that mobility, what is it we are selling? We are selling these IoT devices, trackers, GPS trackers, video telematics or dash cameras, infotainment systems, bike, smart bike gadgets, etc. So for four-wheeler, two-wheelers, or for trucks. We are selling these devices, and then we are selling subscriptions along with it. So if you look at kind of our IoT business, you're seeing that being reported in the last, I would say, 7 or 8 quarters. You're seeing how the IoT business has been growing quite fast, and also you're seeing the margin improvement, quarter on quarter. The base of vehicles that exist in the market is in the order of 300 plus million vehicles, so 30 crore plus vehicles. And, out of that, we believe the target market for us will be 10% of that, which means 3 million. That's the target market. Out of that, we will generate some X amount of money, which will contribute to that 1,000 crore between automotive, corporate, government, and mobility. And so, I hope that gives you a sense. I mean, if you are seeing the numbers, IoT-led business year to date is about 70 crores out of our 270 crores. That extrapolated over next 4-5 years, 70 on 272 is about 25%. So that extrapolated on 1,000 will start giving you some sense of what we are talking.
So is it fair to say that logistics will be the primary customer here, logistics companies?
See, there's 3 sub-segments we've talked about: personal goods mobility and people mobility. Logistics is goods mobility. And so each of them has their own. So yeah, logistics is definitely one large segment when it comes to, the usage of this technology. Across industry, logistics, not just as an industry, but logistics for across industry.
Actually, when you think of this mobility, think of that the other 3 segments we talked about: automotive, corporate, and government. This mobility really, when mobility can go into any of those 3, plus also in the consumer side. So that's the way you should try to read it.
And is this mostly data generation based business, or is this more
IoT device and SaaS subscriptions?
Okay, SaaS subscriptions. Got it. Thank you, sir.
Thank you. The next question is from the line of Devesh Mehta from 3P Investment Managers. Please go ahead.
Hello, sir. Am I audible?
Sir, you are audible. Please go ahead.
Okay, so my question will be largely on the IoT segment. If you look at the sale of hardware revenue for the last 3 quarters, it has been somewhat flattish. So is there any change in the sales strategy? Because while we've improved our EBITDA margins, the sale of hardware revenue should also scale up so that incremental service revenue flows in, right? That's the first question. Second question is, have you looked at AI-140 devices, which are the incremental opportunity for us, or do we already cover them? Is there a regulation regarding this? That's it.
So that AI-140, if you said it, is part of that mobility for the logistics or the goods transport. You can take it there.
Any commercial vehicles.
Any commercial vehicle, to be very, if you want to look at it that way. And we have the opportunities in that space also, and things are happening in the right way. See, the whole IoT business, as you see, the EBITDA is moving in the right way, going up to 10%. The basic reason is the more the SaaS revenue is kicking in and the operating leverage is happening, the EBITDA keeps going up, will keep going up. And we are working, that's our sales strategy.
But sir, like this sale of hardware revenue should also gradually increase, right? Because it has been at the same run rate. Also, if you can share like AIS-140, what would be the mix of the devices we have sold? How much is it a meaningful share or not? What is the opportunity here?
Nivesh, this is something we control and we calibrate. The sales strategy is to cover both growth and profitability. It's something our teams are capable of doing both. It's something where do we focus our energy in which quarter.
Also keep in mind, we are just not an IoT company. That I have to only drive the revenue growth for IoT. And the calibration and controlling every quarter becomes part of the sales strategy.
That's the time.
Thank you. The next question is from the line of Sarang Sanil from RW Investment Advisors. Please go ahead.
Hello, good evening. First of all, Happy New Year to the entire team. So my first question is the additional marketing expense that we incurred this quarter. Was this absorbed in Map-led segment alone and nothing on the IoT side?
We don't look at it like that yet. Sarang.
It was absorbed in Map-led.
Okay.
It was absorbed in Map-led, to answer your question.
Yeah, because you report EBITDA margin separately. So I was just wondering,
Oh, my bad. Sorry. I said it wrong. Mr. Verma corrected me.
It's absorbed there, Map-led. Mapple's app. Okay.
Okay.
So we have the marketing expenses were to build the brand of MapMyIndia, to build the brand of Mapples, to get more users on the Mapples app. At this point of time, that's what we did. I'm not saying in the future we may change or not.
Got it, sir. Got it. My second question is, could you please elaborate on the revenue model in Mapple's Kogo Assistant that we are now involved with the auto OEMs?
OEM, our revenue model stays similar. It's part of our NCase suite of solutions, and hence we have these per vehicle and per vehicle per year, per vehicle per month fees. So that revenue model in OEMs doesn't change. And then for consumer side, there's a bunch of things. There's a membership subscription if you want really low prices on bookings, and then there's some commerce transaction-based revenues if you purchase items or do bookings through Kogo.
Sure. So the Mapple's Kogo Assistant is just an integration we've done to the existing OEM devices, right?
It's more capabilities in our NCase suite, so to make our offering more appealing and add more use cases to OEMs who can then offer such solutions to consumers.
All right. So my last question is, I'm not sure if you are allowed to discuss about it, but we would love to know the status of the planned QIP.
Status of?
The planned QIP.
Planned QIP.
Oh, status. The status is simple. On the 29th of December, the shareholder postal ballot approved it by 99.2% of the 85.5% shareholders who voted. So the company has the opportunity over the 1 year period from now onward or from 29 December onward to go ahead with the QIP when when everybody is ready, the market is ready, we are ready. That's the status as of today.
Sure, sir. Thank you so much and all the best.
Thank you. The next question is from the line of Kshitij Saraf from Tusk Investments. Please go ahead.
Hi, good evening, and congratulations on the continued good performance. My question is slightly related to the use of QIP and how you're thinking about investing in the business going forward. So we've had a good addition to the business via G2P on the IoT side, and you mentioned your plans on the drone side of the business as well. Just a bit more color on how you plan to invest this going forward would be helpful. Would it be safe to assume that majority of the cash would be used in organic activities as in the past we've relied mostly on bolt-ons?
Well, we are talking about it could be a combination of organic and inorganic. We haven't given any numbers to that. All the three markets for all the three businesses we have talked about, for international market expansion, for the consumer business, and for the drone business. That's exactly what we are communicating to everybody.
Okay, got it. That's helpful. Thanks a lot.
Thank you. Ladies and gentlemen, due to time restrictions, that was our last question. On behalf of Anand Rathi Share and Stock Brokers, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.
Thank you.
Thank you, everybody.